Yo, traders, welcome back. And we are back with another crazy trading day. Crazy trading day. It is Thursday, December 11th. Yep, I almost said 12th. December 11th. And we finally had, again, decent price action. So 2 days back to back, we had some beautiful price action, which is actually fire. We finished the day. Ready? Drum roll. $7,000 on the day. $5,000 yesterday, which comes to a grand total of math $7,000. No, $13,000. See, I know how to do math. Don't lie to me. Okay, and we're gonna go and break down all the trades, how we exactly did that, what we're looking for, and all of that good stuff. So first things first, you guys know me. What do? We are supply and demand zone traders in this house. And what do we look for is we identify key levels in the market. So for example, when we are obviously looking at our levels, we want to identify pre-market highs to pre-market lows. Boom. All right, we want to identify pre-market lows right here. Boom. Right? And once we are able to do that, right, and draw any other key levels that are kind of spawning out to us, we then can find our trades. So again, what are we going to do? And it's actually crazy how these levels line up with each other just like so. So we have 1, 2, 3, 4, a resistance zone, a support zone, and a support zone, right? And if we then go to the 2-minute time frame and zoom on in here, market open, this was a beautiful, beautiful trade. So the trade that I took, again, I took 2 trades on the day. The first trade was obviously a short position right here. Now, a lot of people are going to have a little bit of questions about how we were able to say, hey, Will, how do you know to take the short here to make that absolute bangaroo of a move? Well, again, I actually was able to identify this zone while the market was moving. Now, we obviously have our pre-market levels, and that can help us identify trades and moves and all that good stuff. But we have to possibly identify zones while the market is making the move. Right when we had that initial jump on market open, we started chopping, consolidating. And from there, I identified that. And I was like, okay, if we can get a closure below this zone, we can start tapping into the other zones. And that's exactly what happened. And you can actually see what's happening. We're trading below the 200 moving average. We're trading below the VWAP. That helps us to identify moves for the short side. And then obviously we're making those lower lows and lower highs. So then when we get that play, stop loss above the zone, Bob's your uncle, and you make that money, and it's absolutely beautiful. And then you can see we tap into the bottom zone, trend changes, and we actually rip all the way back up, back to market open, which is kind of insane. And then we just start chopping around and being all randomly Judio. But again, what I'm trying to tell you guys, and be very, very, very careful, is you don't need to make a lot of trades. 1, 2 trades a day, make the money, and you're going to be set, right? They always say, go to the doctor so you make sure you don't have problems in the future. Stay consistent, follow your rules, and you will not have to follow and blow accounts. That analogy was terrible. Don't listen to me, but you know exactly what I'm trying to say. Okay, so all in all, beautiful trading day. We have Friday. Hopefully, it's going to be a smackalicious trade. And again, the students are all making some crazy, crazy plays as well. But other than that, have a beautiful rest of you guys. It's Thursday. Hope you guys like the trading recap, and I'll see you guys in the next one.